In this, I'm going to be showing you my scalping session. We're looking at S&P 500 M&A futures. The structure started with bullish trend up that has a break, moved to a new extreme. Market shortly after consolidated. The bias is a little bit more neutral because EMA flattened. We are going sideways, so I'm going to follow the short-term trend line rule. Right now we have an uptrend working higher, so we expect new high to be tested. There's a slight bullish bias because we traded up into this consolidation. Alright traders, I'm resuming the video because just as I did my initial analysis, we have a new high, first entry long, pullback, second entry long. I'm going in with 8, we're bouncing off my exit order, but we need to take through. I'm going with 8 contracts and we got filled. So 7 contracts was the scalp, 2 points, and 1 contract is the runner. I put my initial stop loss below this first entry long. Normally you put it below the single bar of the entry, but because it is such a tiny bar and it is so close to the important swing, the single bar is so tiny, there could have been stronger pullback, so I placed it 1 tick below this significant swing. Didn't matter at all because the scalp was reached. So this was a 2-point scalp because we traded up. This uptrend is new high, downtrend has a break, attempt to get new extreme. We have 1 attempt to go long, pullback, second attempt to go long, EMA keeps holding, and this is a new high, first entry long, pullback, second entry long. High probability setup because we traded up into this with the bullish bias, and uptrend trend line rule tells us we need to get new high tested. So we broke higher, but EMA keeps holding. We have series of higher lows, so I'm not going to be selling just yet because this is not the structure I want to be fading. Even though it resembles a small consolidation, you can see this is not a healthy trend range where I would be comfortable fading to the downside. There's too much of a bullish bias. So far the structure is very similar to July 10th, the market structure. We also traded back into trend range, but this is why you cannot fade, because you can see you would have got stopped out just to see it go exactly where you thought it was going to go. This is why when it doesn't resemble a healthy trend range, you just simply don't know how many pushes high there's going to be. So we need to wait for that push below EMA and a lower high. That didn't happen. We just continued trending lower without any setup. The overall structure still resembles a trend range, but this is a little bit more bullish. So in order for me to sell, I need to see push below EMA and a failed second entry long reversal pattern. I was contemplating taking this high low. It was a very tempting setup. We should get the new high for the spike in channel, but this is not the cleanest spike in channel. EMA keeps holding, so it's probably going to make the push higher. Had it formed stronger on its high, the momentum would have given me a green light. But since it was a little bit neutral, I waited. We broke the important key level and prices keep creating higher highs and higher lows. So naturally, this is looking more and more bullish. So I have to draw a bigger uptrend. We have first 2 swings at the bottom. And right now, I'm looking for 2-legged pullback at the EMA or at the key entry point. But we already have double top, so I need to reset the count here. Over should generate a stronger break. We have break and new extreme over the downtrend. Now I cannot go long since we're below EMA. I expect new high of the uptrend, but I need to see the push above EMA, the resumption of the bullish momentum, to understand that the buyers are in the market and we're about to get the new high. So as long as we're below EMA, I cannot go long just yet. Okay, so we have a nice push above EMA. We have a new high, first entry long. So what I'm thinking about, I would like to see a new high, first entry long, second entry long. It will also be failed second entry short from the bottom. So I'm thinking about second entry long at the EMA because we need to get the new high. The downtrend played out with the break, moved to a new extreme. We entered the consolidation. I came back from my break, and right now we have a brand new uptrend working higher. And since the downtrend played out, my bias, at least temporarily, is shifting into a bullish bias. So I want to see second entry long at the EMA. Alright, we have a second entry long. The problem is this leg down is so much longer than the first one. Initially I was drawing the tight channel like this with the break and new extreme, but this is so much longer. I have to respect this channel on its own. And because we broke below EMA here, I need to get the high-low confirmation set up because we broke below EMA at first and we don't have clear broad 2 legs. I want to see high-low confirmation setup. Alright traders, resuming the video as we finally got the high-low. If we didn't get the high-low on a second entry long because the downtrend needed to test a new extreme, but now that we have a break and a new extreme, we pushed above EMA and is a breakout pullback out of the congestion. We're above EMA. We're also testing the small support. We free ourselves out of the congestion. The uptrend needs to get new high. It is a great signal bar. So it is worth for me to take in a shot here. It will either work or it won't. Okay, the setup is getting very congested. It is making me rethink if I want to scratch the trade or not. Because once we didn't go high, we have 1, 2, 3 bars stacked right next to each other, all part of congestion. Alright, and we got filled. We took 7 ticks because I used, as you can see, stop order entry 1 tick above. I didn't really use at the close, which I should have. And as you can see, the trade really made me question my analysis, because once you enter, you see 1, 2, 3 bars stacked right next to each other. This is definitely not what you want to see right after you enter. There is no momentum in your direction. But as a trader, you need to handle the discomfort. I was very close to taking a break even here, but I simply have to trust my rules and the analysis. This uptrend should get to new high. We have a break and a new extreme. Downtrend played with the break new low. It is a breakout pullback. There was a new high for a century long, second entry long, new low for a century short, second entry short failure, which propelled the market go higher. And once it triggered, it pretty much ran all of these stops. So this is a great example that no matter how scary the trade is, no matter how much you want to move the stops, you have to reinforce the analysis and you simply have to trust the price action rules. Okay, it doesn't matter whether the trade will work or not. You just simply have to acquire the mindset, because it is a mental skill that you need to learn. Because if you keep adjusting your stops and you keep taking break evens every single time all over the place, you will never truly learn to acquire the mindset to be able to withstand the minor discomfort. So we should get the new high. All right, traders, we reached a new high. I'm gonna wrap it up with my 2 trades. So this is the overall structure for today. We started with a structure that is very similar to July 10 structure. We have a second entry long. We actually had also decent high low even before the market opened. You have a break in your extreme. You cannot sell just yet. At the same time, after breaking new high, you cannot be looking for wider channel just yet. It established back into trend range that later on developed into bullish uptrend, just like July 10. Now, as you can see, prices are struggling to really reach the midline. There is bullish imbalance in this trend range. There's really no good setup here. It's a little bit too sideways, a little bit too neutral, so you need to let price action develop a little bit more. Once there was no failed second entry long below EMA and a second entry long pushed back above EMA, why the downtrend was negated? Because you're not supposed to have successful second entry long if the range is the pattern without imbalance. So I need to adapt to a tighter break in new low, and this spike in the channel needs to get new high, and this is a decent high-low confirmation setup. Over the second entry long, you have enough room for a scalp. Even if you can use limit order, this is a great setup, and it actually produced a very significant runner that you can trail very easily. You're going to basically select important swings and trail your runner as it keeps going higher, and it almost never got your stop loss. You are able to ride it pretty far up. No setup on the way up, unfortunately. I was looking for second entry long to participate while this uptrend is in play, because it looks like a very strong uptrend, but overshoot can generate stronger pullback in the opposite direction. It can create correction or reversal. This was the important area where you expect new high to be tested, massive push above EMA, but once prices pull back into trend range, this is where you have to reassess, hold on, why EMA is not holding. The overshoot selling pressure is still present in the market, and then you have a break in new high, two-legged pullback, uptrend played out, and no wider channel to the upside is established. Every single high is lower and lower, overshoot reversals kicking in, and this is a decent lower high. And by the time you break lower like this, you have to admit, okay, you are not going to test the new high, overshoot, reverse the structure. That can happen, and you're basically looking for wider channel to the downside, because the short-term ones cannot explain the structure. I don't see any good setup here. It is quite choppy. Uptrend needs a break, move to a new extreme. There was nice lower high context-wise, but the single bar is horrible. We cannot sell below this bar right here. There's a decent fail breakout, but only if you have this broader downtrend working lower. At this point, it is getting 4 confirmation. You can see congestion. Most breakouts will fail, and especially if it touches the important key entry point. Break, new extreme. You cannot take this lower high. Horrible single bar. Uptrend is new high. And once again, you have a break in new high, so you expect a lower high below EMA to get the new low. New low was made, so you expect correction or reversal. Uptrend played out with the break and move to a new extreme, two-legged pullback. Market is not reversing. We broke back below EMA. Broad two legs are indicating, okay, the bullish momentum is weak, and for this reason, because you're still back below EMA and reversal didn't happen, you can consider lower high, great signal bar, More consolidation, massive bullish spike, completely indicating right now a brand new bullish uptrend has been established. So we expect new high following the trendline rule. You can take the second entry long as I explained. Great high low breakout pullback confirmation setup, followed by a double high probability setup break. New extreme of this uptrend has been tested. You're pausing, looking to go long because we can have correction reversal, and this is a new high, first entry long, pullback, second entry long, failure, reversal, breaking extreme, and a second entry long to finish the day. So a lot of price action, decent day. I hope you found the video helpful, educational, and I'm going to talk to you next time. Good luck with your trading.